Sarah, great to have you. I certainly have been talking about Stada for months in my stock movers every morning. Tell us what's so special about this company.
Hi, Nero. So basically, on the surface, there's not too much special about it. It's a company of copycat, does cheap copycat drugs, but its profit margin is one of the lowest amongst its peers. So what this does is it gives Cinven and Bain the opportunity to improve the profit margin. Plus, the company has a branded drugs business, which will help it kind of offset the weakness in the generics space.
Now, what ultimately pushed this deal through, Sarah? Was Elliott Management instrumental in that, or was it something else?
So we'd reported a few weeks ago that Elliott Management had been building its stake in the business after the first bid had failed. They'd inched up towards more than 8%, and the market was really unaware of what their intentions were. The market was slightly confused. Were they for the deal? Were they against the deal? And Bloomberg News reported this earlier this week that they had signalled its interest in helping Cinven and Bain get this deal across the line. Public takeovers in Germany are notoriously difficult to get across the line, and hedge funds, while they were supportive of the deal, they wanted to try and keep a big minority holding, which would mean that they would get healthy dividend payouts.
Yeah. Going forward, Sarah, Bain and Cinven, this isn't quite the end of the road for them, though, is it?
So they still need to get 75% of shareholder approval at the next AGM. Once they get that, that will help them have more control of the company. But this is certainly a very good sign. They failed in their first attempt. They bumped up the bid by 25 cents, giving the company about a 50% premium on last year. So, you know, it's great news for Stada shareholders.
Is there a risk that Bain and Cinven overpaid here, Sarah? And more broadly, is there a risk that PEs could overpay? Are they under pressure to deploy the cash that they're sitting on?
So data says there's about $1.6 trillion of what the market calls dry powder sloshing around the market. So there's a lot of competition in the market at the moment. You have sovereign wealth funds, you have cash-rich Chinese strategics, you have Canadian pension funds, all vying for attractive assets. Now, with the amount of capital that private equities are sitting on, with the debt market so cheap, there is a certain risk for multiple to become a little bit punchier than they have been.